Good morning, everybody. Welcome to this LinkedIn Live. I'm joined by David. We'll do some intros shortly, but if you want to let us know in the comments section where you're watching today's event from, that would be really helpful. Let's get the intros going. So my name's Phil Budd. Most of you will be familiar with me, hopefully, because I've sent you an invite out for today's event. I'm a business coach based just outside Bury St Edmunds, helping business owners and their teams take their businesses from good to great, and ultimately get them to that point where the business works without them, which is either getting passive income from those businesses because they put a management team in place that the business works without them, or ultimately getting the business to the point of selling, which is why I've got David with me here today. David, over to you. Do you want to do a very brief intro for those watching today's session?
Yeah, sure. Thank you, Phil. So my name's David Scrivener. I'm the corporate finance partner at Ensors. We're a firm of accountants in East Anglia. Hopefully a number of you will be aware of who we are. Basically, what my job is to help our clients to buy businesses and sell businesses, as simple as that. I've been doing this for around about 20 years. Last year, we helped 27 companies either buy or sell businesses. So we're very experienced in doing this, and this morning, hopefully we can go through some of the key areas.
Yeah, very good. It's great to have you with us, David. And we'll talk about context shortly because I'm seeing it, there's huge demand at the moment on mergers and acquisitions. But just to set the scene for everybody today, if this is your first LinkedIn Live, I love for these sessions to be interactive. So whilst David and I are going to be sharing our experiences of buying and selling businesses, I want this to be interactive and an open discussion. Equally, at the same time, I recognize if you're watching today and you're at the precise point about looking to sell your business, you may feel that actually you don't want to share certain things with today in an open forum. So what I've done at the bottom of the screen is just included our contact details. So if at the end of today you've got some very specific questions that you want to ask myself or David, both of us are going to make ourselves accessible to that. So you can get in contact with us via my contact details or David's that are now going to come up on the screen. And you can ask us some very specific questions privately and confidentially. If you'd prefer, that would be the best way of doing things. I'll put those details back up as we get into the main body of today. But if there's questions that you do want to share openly, put them in the comment section or the chat area, and we'll ask those as we go through, because I want this to be about your time and you being a good, effective use of what you're doing today. But let's start off, David, by getting a bit of context to today's discussion, because we spoke a good few weeks ago, and we had a bit of a discussion around mergers and acquisitions. What are you seeing, just from your perspective? What are you seeing at the moment around mergers and acquisitions from a market perspective?
It's probably not an understatement to say it's never really been busier. It wasn't expected. I think if you'd have asked me 15, 16, 17 months ago when this all began, whether we would have as much M&A activity right now as we've got, I would have been very surprised as to where we are now. It's got to the point where really, well, there's a few things that have fueled it. So earlier in the year, we had rumours about changes to capital gains tax around the budget, around springtime. We've got another budget coming at the end of October. That's really not very long away. And we've got deals that have been in the offing for some time trying to close during that period. Realistically, if you haven't kicked off a process and you're well advanced, you're not going to have closed your transaction by the end of the budget. There's also a huge amount of pent-up demand as well. So transactions that had been put off around about the time the pandemic hit last spring, we've seen a number of those come back into play. And I think that is fueling the market as well.
Yeah, great shares. And I can concur with that as well. I think that for a lot of people coming out of COVID, over the last, I say coming out of it, I know we've got still a lot of challenges, so I've got to be careful how I word that. But I think that as we last 2 years and what we've experienced through it, I think that a lot of people have come through this and now beginning to think, okay, well, what's my long-term aim here? Some people are just looking to offload the business quickly because it has been such a difficult and challenging period. But I think also there's some good growing businesses out there that are beginning to think, hang on a second, could I capitalize on that now and look to exit the business while the business is doing really well? So let's ask a different question then. Now we've kind of got some context that there is good demand. From your perspective, why would a business owner sell their business, and kind of what helps them reach that decision?
I think you've touched on some of the issues there already, actually, Phil, in talking about why the market is busy. We see clients come to us for all sorts of reasons in terms of why they want to sell a business. The ideal person comes to us a number of years before they want to sell, with a plan to sell. Perhaps their business is nearly ready but not quite ready, and they might need to engage with somebody like you to help them put the sort of final building blocks in place, to get them ready. The key thing actually that's missing in most businesses that we see, is that sort of classic second tier management team, that allows a shareholder owner manager to step away from the business and allow them to sell it. We'll talk later about different types of sale, but that is a key point across any kind of sale process. So realistically, what do we see at the moment? So we do see business owners approach us because they've had enough. That can be a motivation for sale. Perhaps they were struggling in business before the pandemic hit. They've managed to get themselves through it. They may have had a positive business experience or a negative one, and actually now they're looking at a time to sell. It may be that they've had positive financial results in the last 12 to 24 months. A number of businesses have, for various different reasons, and use that as an opportunity to try and sell. Or it may be to do with that sort of classic retirement sale. As I say, lots of deals were deferred last year, understandably at the peak of the pandemic, even though we did originate and start and close some transactions in sort of Q2 of last year, if you like. It was very much not the time to really be thinking about starting a sale process, if it was going to be a planned and drawn out process. So a number of factors. There can be lots of emotional factors as well. It could be for family reasons. So yeah, there are all sorts of reasons that people. I'm sure you see that in your business as well, Phil.
Yeah, absolutely. I think that the emotional journey that we've all gone through as business owners over the last 2 years has helped us. It's been a period of reflection. There's been challenges, but I think that the key thing has been a period of reflection from all of us. Equally, there's those that are looking to buy businesses and capitalize on the opportunities here. So this isn't just about selling, is it? Actually, there's another angle here, which is some are looking to take their businesses further, not just through organic growth, but also through acquiring other businesses and adding it to a portfolio of holding companies. I think that what that sparks and come. Sorry.
I was going to say one thing, that we haven't yet seen, but I would expect to see probably now as the government stimulus starts to wear away slightly. So furloughs ended, hasn't it?
Mm.
And it's becoming a bit harder in business. Cash will probably get tighter. Ordinarily in a recessionary type of environment, which let's not forget, that's where we were last year, very deep recession. We're now coming out of it, and some businesses will be struggling with the cash impact of that. I expect there will be some distressed type sales, and with that, the opportunity for stronger businesses to capitalize on that and buy businesses that ordinarily are really strong, but have got a cash flow problem.
That leads me on to another question then, because we often see that, don't we? I say often, it can be the case when someone's distressed, they're trying to just offload it and get rid of the business. But I suppose the question to ask is, when is the optimum time? When is the best time to sell a business from a financial perspective? Is that an impossible question that I've just asked you, or is it possible to answer it?
Well, I'll try. See, I'll let you be the judge. So I suppose the best time financially is when if you think of it as like a curve, um, and it's you really want to be selling where you can still forecast forward with some certainty that the business is still increasing. You don't want it to have kind of plateaued, um, but obviously you don't want to go too early on that journey either, because when it comes to selling a business, if you ignore the sort of early stage tech businesses, that's an entirely different thing. But if you're selling a business that's profitable, what somebody as a buyer wants to see is that history of profitability from a pure financial perspective. There's nothing better than they've actually done it. So if you're forecasting it, that's great. But if you've actually done it and you've done it for several years and you can show that growth, then that's financially the best time to sell a business. Now, that ignores loads of other factors, which I often talk to clients about planning and timing for sale, but actually you need a degree of luck as well, to be in that right position at the right time, and for there to be a buyer that wants to buy you at that right time. We see a number of transactions. We'll talk later about the process for sale, the sort of planned process for sale, but a number of businesses get sold because people approach them, and they approach them at that perfect time.
And I suppose linking in with that, we're talking about COVID. That if people have actually had a relatively good COVID, I use that carefully because some people have not had a good couple of years because of COVID and the pandemic. But if you've survived a really difficult time and grown during that period, that now is a really good time to sell, isn't it? Based on that, because you've shown that your business has got great resilience through what has been a difficult time. Would you agree with that?
I'd agree with it. The thing we're seeing on valuations is you've just got to be careful as to whether that was a one-off. You could have a one-off downward impact of COVID in your business. You can also have one-off upward impacts as well, either because there's been stimulus that's been added or because you're in a market that did particularly well. But you're right, if you've got a business that's survived it very well, and as a result of what's happened, it could be that the market has changed and it's gone in that business's favor. Potentially, if it's an online business, for example, it's done particularly well, that's really not going to change. So those businesses will be more saleable, more valuable now than they would have been 18 months ago.
Yeah, great share. So before I ask David another question, please, if you've got any questions specifically that you want me to direct to David or you want to ask me, please share those. Like I say, I accept that if some of you are currently in the position where you're thinking about selling, you maybe don't want to share those questions directly within the event, in which case contact details will be available again for you to pick up those discussions directly with me or David. Let's move it on then and talk about the options available. So, for most of the businesses listening to the session today, David, they're going to be a business. Most, I would say, if they're a business owner, going to be under the 50 million turnover in terms of size of business, anything from maybe £500,000, £250,000 upwards to that sort of level. When we're looking at selling a business like that, what are the options available, in effect, the routes that they can take? Do you want to just talk us through what those typically are?
Yeah, sure. There are essentially 4 different routes that you can look at if you're looking to sell a business or realize an exit. The first one, which I won't dwell on, is a listing, is a public offering, if you like. We don't see very much activity in the sort of types and size of businesses that Phil's mentioned just now, but be remiss of me not to mention it. It is an option, and it can be the right option for certain businesses. What we see more regularly, though, are 3 other options. So the first one would be a management buyout or an MBO. We do lots of MBO transactions. Essentially, for those of you not aware, that's where you sell your business to your management team, as the name suggests. It would normally be a core management team. That team doesn't need to raise all of the funds to buy the business. That's a common misconception. Often the money will come from an external finance provider based on the profitability, the cash flow generation of the business, or it could come from a private equity investor as well. That's a common partner in an MBO transaction. MBOs are really popular because not only do they give the shareholders concerned a very controlled exit process, there's also the notion of being able to reward the key management who have helped the business owner grow the business as well. So MBO is one option. A slight variation on that is something called an employee ownership trust, an EOT. That's the difference between an EOT and an MBO, is that in an EOT, you are selling your business to all of your employees. So it's the easiest way to think of it is like the John Lewis Waitrose type model, obviously on a much smaller scale. EOTs as a concept have been around for a long time. They've been more popular since about 2014 when there was some tax legislation introduced that meant if you sell your business to an EOT, you pay no tax at all. So they have become more popular. They've become more popular, if I'm looking at really from a tax perspective, they've probably become a little bit more popular because Entrepreneurs Relief, which used to apply up to £10 million worth of gains, was reduced in the last budget down to £1 million worth of gains. So I suspect that's one of the reasons why EOTs have become more popular. But to sell to your employees as a whole and to do that on a trust arrangement, it has to be done for the right reasons. It has to be done as a proper employee-owned business going forward. There's a lot of difference between that and an MBO. But those 2 types of business sales are very controlled. The shareholders can effectively sort of partly dictate how that process works. The fourth one, or the third one that we see most regular is what you call a trade sale. That's the one that most business owners are probably more familiar with. That's where you might sell your business to a competitor, a larger competitor. It could be somebody else in your chain. It could be a vertical integration play. You could sell to an overseas business. It could be a UK business, but essentially you're selling to another corporate business. The differences between, if I put MBO and EOT together and a trade sale, is that I've mentioned about controllability on the MBO and the EOT. When you go to market to sell your business, and this is often a really key concern for people when they start the process, it's that first step is that, will people talk? What will the industry say? People have often said, well, if I'm putting my for sale board up, then, who's going to find out about it? Are my employees going to be worried? Are my customers going to be worried? So it's we do act with non-disclosure agreements, and actually most of the time that works really, really well. But there is obviously a bigger risk in going down that route.
Yeah, I mean, my experience of that, I think it's a really interesting point you've touched upon, that sometimes there can feel like there's this shame as a business owner that you want to sell your business. And that it feels like you're maybe being greedy and you're being money orientated. And that fear can stop you from progressing forward in terms of even thinking about a sale, because that worry and perception, I think you're absolutely right, particularly with staff members. And there's a great book, this reminds me of, Built to Sell by John Warrilow, where he actually within the book gets his team involved, his leadership team involved in the process of, this is the end point that we want to work to, which is to sell. And actually get them involved, and bonus pots and different things can be structured in a way where the team are really incentivized around the sale. And when I've seen it done like that, it can work really well.
Yeah, and that's a great link actually to say, if you have got that run in to sale, that period where you're thinking about selling, maybe in 2 years, 3 years, even 5 years time, engaging your management team, but not just engaging them in conversation, actually bringing them into the equity so they do get part of the proceeds when the business is sold, is a huge motivation. We use something called EMI options, which give managers the ability to exercise an option at the point of sale. They don't actually have to ever write a check for them, if you like. But ultimately they are then part of that sale in cash terms, and that's a huge motivation.
Yeah, great share. And just thinking about it, because you said about the importance of having a management structure in place, and I think that this is a key element as to why sometimes growth in a business is stifled, actually, because of the structure and the support within the team. From your observation, because you see it from a slightly different side of the fence to me when I'm coaching, you're looking at it from a finance perspective to a certain degree. Why is it that a lot of business owners are hesitant about putting a management structure in place?
There's loads of different reasons. I think control is one of the reasons. I think if you've set up a business from scratch and you've got that opportunity, or you feel there's a need to pass the business on, in management terms, that's a huge issue, I think. I think financially, though, which is probably more the question for me, if you are going to spend 6 figures on bringing in a management team, however many that might be, then I think if you see that as an immediate hit to your bottom line as a business owner, I think that is a big, psychological barrier to go through.
Mm.
And it is an investment, isn't it? I think you have to look at it like that. It is an investment. What we see, in broad overview, is that businesses that don't have a good management structure, it's not to say you can't sell them, but you will sell them generally with generally a not as good an outcome. So the most likely outcome, if you don't have a great management team alongside you, is that the buyer's going to want you as the business owner to stay on for longer.
Mm.
So it's unrealistic if you haven't got a second tier management team to expect to sell your business and then walk away the day after with whatever proceeds you achieved, and that be that. That rarely ever happens. So the more you can pass the business on to a second tier management team, the more likely it is that you are going to be able to do that. Because, classic example, I was sat in a meeting where we were selling a business. It's a long time ago now. This was the first meeting we'd had with prospective buyers. Buyer asked a question. So, business owner, what do you do on describe your typical day? And he said, well, I wake up at 5 o'clock in the morning and I log on and I do it. Basically, he finished at sort of 7 p.m. in the evening, and he did that 6 days a week. And, you could tell that he was the business. And from a buyer's perspective, that's just fraught with risk. He's probably got all the customer connections. He's got all the supplier connections. He's basically doing probably 2 or 3 full-time equivalent jobs. And so that's, from a buyer perspective, you've got to question what you're actually buying.
I think it's a great point, because if you've got potentially private equity firms looking at acquisitions, then they don't really want to buy a business that is going to require them to work from 5 in the morning till 7 in the evening, right? It's a period. I don't know if there's many out there would anyway, but I think they're looking for just a straightforward investment. I think it's a great point that you've highlighted there.
Yeah, I mean, if you're going to sell to private equity, absolutely, you have to have a great management team in place, and that, because that's essentially what they're investing in. Private equity doesn't invest in, they don't invest so that they can really get their hands dirty. A few do more than others, but essentially it's that management team to grow that business going forwards.
Okay, so just around those options, when a business approaches you and says, "Look, we're now ready to sell," just talk me through from your process perspective how you think about helping the client see what the right option is for them, because there's quite a few options there on the table, and my experience, particularly with EOTs, is not that many people are familiar with them, and I know there's some minimum requirements to fulfill to achieve it, so there's some strict criteria, but how do you go about helping a client decide, okay, we want to sell it now, what's the right process mechanism? Is it exploring multiple ones or going with one specific route?
I think you need to start with all the options on the table to start with, um, because I have a number of people come to me with predetermined plans, which is, you know, either I'm going to sell the business a trade sale and I think it's going to go to this business. And I said at the start, I've been doing this for 20 years and I can't remember many situations where that's actually happened in the end. It's rarely ever the case. The other thing that happens is that people will come in and say, we can't do an MBO. The management team haven't got enough money. There aren't the right people. So I think you have got to explore all the options to start with. As you say, EOT has got lots of other technicalities where you've got to jump through hoops. And so I think that's probably a separate thing, but I think you've got to keep your options quite wide initially. Don't narrow the options. I mean, quite often, if we're going to sell the business to trade, if the business is right and it's got the right hallmarks, then we will sometimes market it not only to trade but also to private equity at the same time. So we're almost running 2 processes in parallel. So there could be an MBO backed by private equity, or there could be a trade sale.
Interesting. Let's move the conversation on to 3 key areas. So we're going to talk about the one that I imagine a lot of people are really itching for us to discuss, which is around business valuation, which, I know we've talked privately about this and we get asked that quite a bit from business owners. So business valuation, we're then going to move on and look at the process mechanics of getting the market out to sell. And then we're going to talk more specifically around tax implications. You referred to already briefly around tax relief when it comes to sale. But let's kick off with this first area around business valuation, okay? In terms of the things that impact it and how, in effect, valuations are reached.
Okay, lots of things impact business valuation. But if I sort of explain to, I mean, some people might know this already, and I apologize for that, but I'll explain it to everyone anyway. There's 2 levels of business valuation. So there's the first one is called the enterprise valuation. That's the value of a business, effectively on what we call a cash-free and debt-free basis. If you want to kind of imagine what that looks like in something that might be easier to understand, that's a bit like valuing a property without understanding whether there's any debt behind it. So the enterprise level of evaluation looks at the profits that a business earns and times them by a multiplier. And that's how we arrive at an enterprise valuation. That is then adjusted to arrive at something called an equity valuation by that debt that I mentioned just now. If the business is carrying debt, that would be a negative adjustment. If the business is carrying surplus assets, which are quite common now, so it could be surplus cash that's been undrawn profits from previous years, that would be a positive adjustment to the valuation. And other non-trading or assets like property, for example, you need to reflect the true value of the property in the valuation. So that would tend to be a positive adjustment. So there's two layers. There's the enterprise valuation and then the equity. And it's the equity value that you as shareholders effectively participate in when you do sell your business.
Interesting. So when we're thinking about the things that impact the valuation, we've talked about a few things, haven't we, about management team, how much the business works without them. We talked about the asset value of the business. Does it carry any debt? What are some of the other key considerations? Let's look at the market at the moment with the acquisitions you're involved with. What are buyers looking at within that that's really affecting whether they're prepared to offer the full figure for the business?
Okay, so the most popular thing at the moment is businesses that have got strong recurring income. So businesses, for example, those that operate in financial services are popular. Some that in the IT sector, in the managed services, where they've got strong, predictable future income that's got a degree of recurring nature to it, if you like, are very, very popular. And it's obvious why businesses, business buyers would like that because they can look forward and with some certainty understand that what they're buying is going to be there in the future. So that's really, really popular. And that will basically, how that tends to work is that businesses that are more have either got greater growth prospects or are more predictable in their future earnings are likely to attract a higher multiple, that second factor in the enterprise valuation, and therefore those businesses are likely to be worth more.
Yeah.
So there's
Anything
those
else?
two. So there's those two. The equation that's got three parts to it, if you like, in terms of business valuation, is strong earnings, being in a sector that attracts a strong multiple, and then having a strong balance sheet to support it. That's the ideal situation. Something to think about right now, which is really topical in business valuation, is COVID. We mentioned it a number of times. What business valuers are struggling with at the moment is what is normal performance. So
Mm.
if your business had a year end, most businesses will now, that will have had some impact of COVID, and it could be positive or negative, then what does normal income, what does normal profit actually look like at the moment? And there's a number of different approaches we've seen applied to that. We sold a business to a European buyer late 2020, where actually they ignored all impacts of the pandemic. They said, look, we know you've been impacted right now. We'll go back prior to that period. We know that you were historically doing this, and that's how we'll value the business. So that's one attitude. The other one is to try and what we call normalize earnings. So it would be to try and make adjustments, which is fine. But those adjustments will obviously always have an element of judgment within them.
Interesting. So, from what you're seeing at the moment with buyers, are buyers using COVID in the last 2 years as an excuse or justification to knock down the price? I mean, you've given a really interesting example there, which sounds a great business with great values in the sense that they're looking at the bigger picture and it's about having a business the right fit. But are there acquirers out there at the moment, buyers that are partly using it as a bit of an opportunity? So whilst there's a good opportunity to sell at the moment, my point being is actually are people then using that to knock down the price? Therefore, it's not as good a time to sell.
We haven't seen, you know, speaking candidly from what we've seen, I haven't seen an awful lot of that yet. Although I mentioned earlier, didn't I, about those potential distressed opportunities that might come through later on, perhaps in this year or maybe early into next year. So not a huge amount of opportunism around. I mean, there are certain sectors that have struggled more, and therefore there'll be more opportunism in those sectors. But yeah, we haven't yet seen it. I wouldn't rule it out though.
No,
I think where you've got to be careful though is when you go to market is this has always been the case, probably more relevant now, is presenting something that actually is deliverable. Often, I mean, very early on in my career, somebody described what I do, corporate finance, as event management. You know, what you're trying to do is you're trying to just guide people along, buyers along a process, and not give them any surprises. So really what we see as a problem in sales processes often is that people will predict high because they think that's going to generate the biggest offer, and then the whole thing comes unstuck in due diligence. So when the buyer actually gets and tries to lift the lid under the business properly, that's when you start to come unstuck, and that's where you'll start to see prices reduce. And as a business owner, you're in a really difficult position then, because you've been through a sale process, you've chosen your preferred bidder, and then the buyer starts to chip the price, and that's a really difficult position to be in, because emotionally you've partially sold the business by that point in time. So, and even financially, some people have have partly sold the business by that point in time as well. So you have to be really careful that what you present is reasonable. Now, you know, people get, you know, forecast is, you know, a forecast, but you've just got to be quite sensible about it.
It's a really interesting point about, I mean, sometimes people have already bought the yacht or the holiday house right before they even sold the house, kind of thing. So before they even sold the business, they've kind of got one step ahead. And I think that emotional element that you mentioned is a really key point that I just think it's worth mentioning, which is the length of the sales process can go on several months in some cases, and maintaining the business growth and the consistency with the way the business is performing, I've seen as being so important in still making sure you find that future seller. It's so easy to get distracted in the sales process, isn't it, David? I'm sure you've seen it, where you want to sell it and you start to get your hopes up. It's like selling your own house, isn't it, to a certain degree, that actually you can lose sight of what you're still looking after in the first instance. What's your thoughts around that?
You're 100% right. I mean, you haven't sold it until you've signed the SPA and you've got your money, and even then, you might still be involved in that business going forward. So, you really cannot afford to take your eye off the ball at any point. As I say, going back to that event management metaphor, you need to keep the business running. If it's not running smoothly at the time you enter into due diligence, that will be found out and ultimately may impact the price or the structure of the deal that you get. So yeah, it's a difficult juggling act, and that might be where, you know, you need some external support in the business at that time, because selling a business does require an awful lot of owner managers' time. So initially, we'll be talking to you about gathering information to present your business for sale in the best possible way. When potential interested parties make an approach, there'll be a series of what we call buyer-seller meetings. They're another big time draw on an owner manager who's probably already busy anyway. So, and then once we get to the point of sale, entering into due diligence phase, again, that's another draw on owner manager's time again. So realistically, you do have to expect that you're going to have to work very hard. And, you know, sale process, you know, if you're starting from scratch without a buyer, I think if you could get the sale done within 6 months, you'd be doing really, really well.
Yeah.
I think realistically, if you're starting without a buyer, it can take far longer than that. Clearly, if you've already found a buyer, that's different. You know, transactions can be closed quickly, but they still come with a time requirement.
Well, and this links back to that point that you made earlier on about the importance of that management structure, because if you haven't got that management structure in place, I mean, that's going to affect the valuation. But secondly, you're going to be incredibly time poor, because you've got to do the due diligence part, but also still run the business day to day. Let's move on and talk more about the process mechanics. In fact, before I do, again, I just want to remind everybody, if you've got any questions directly that you want to ask, please put them in the comment section. If, because of confidentiality around the subject matter, you just want to contact myself or David directly, then contact details now appearing on the screen. David, I know you've said to me you're happy with this. Please feel free to get in contact with him, and contact him. And equally the same applies to me, because I appreciate some of the subject matter around this. You may have some specific questions that you don't want to share within this particular forum directly. Let's talk about now, move on to that process mechanics. Just talk us through that. So I've decided to sell my business. What's the process? How does it work?
Okay, so for most small and medium-sized business owners, that first conversation is exactly that. I want to sell my business. Where do I start? So let's assume you haven't found a buyer and somebody hasn't approached you, or maybe somebody's approached you, but you want to explore what else is in the market. That's quite a common scenario. It's quite a common reason why people look to engage with us to look to sell their business to a wider market. So first thing we need to do is sit down and obviously learn about their business. One of the things I will say to them very early on, though, is that we'll never understand your business as much as you do. So this is a team effort. We need to understand what your business is about so that we can do the research to potentially find the buyers for the business. And that's the early part of the conversation. So, let's really understand who buyer types, really, rather than necessarily specific buyers of this business. That's what we're looking to identify early on. That then drives us into creating documentation for sale. So when we approach trade buyers to sell a business, same for private equity buyers as well, we initially approach them with an anonymous, generally an anonymous, occasionally not, but most of the time an anonymous teaser document that can be 1 page, probably up to 4 pages of information about that business, the industry it's in, some high-level financials, some other key reasons for sale. And that's usually our first approach to those potential buyers. That's the first thing that they will see. So there's a balance there with, you've got to give enough away, because if you don't, you're not going to get the right level of interest. But clearly people are worried about confidentiality at that time, but it generally is anonymous. If a buyer is interested in taking the discussion further, then we ask them to enter into an NDA, a confidentiality agreement. And once they've entered into that confidentiality agreement, they get a fuller document called an information memorandum. And the easiest way to think about that is that's effectively a brochure for selling the business. So it includes key things about management, market, suppliers, customers, financials, all of the things that a buyer of a business would need to know if they were interested in buying it. Now, those documents can be hundred, no, it's probably a slight exaggeration. My view is they don't need to be that long, actually, because actually if you've found the right buyer or the buyer types, you shouldn't really need to explain too much about what the business is. So it's about keeping those documents relatively focused rather than going on for pages and pages and pages. So once a number of buyers, hopefully, have received the information memorandum, the next stage in the process, I mentioned it earlier, would be to generally have those buyers come and meet the business owners. They might sometimes also meet that second tier management as well, depending on what type of process we're running. That meeting could be at the advisor's premises. It could be at the premises of the sellers at the business. That's often the preference, because a buyer wants to see where the business is and how it operates. But obviously, there's some confidentiality issues around that. So meetings at weekends or in evenings or whenever can take place. Those meetings are really the opportunity for the owner managers and the management to bring the business to life. So in those meetings, before that, the buyer has only had an information memorandum, just a book to look at what the business does. They'd have referenced the website for sure, and any other online activity. But that's the opportunity for you to really sell what the business is at that stage in those meetings. And none of those meetings, there's no such thing as a typical one. There will be a small agenda, but really you as owner managers telling the buyer about the business, filling in the gaps. They will have questions as well, and they're usually a very interactive process. The other good thing about those meetings is trying to then drop in a few positive points as well. So that might be, oh, we've won this new sales contract or something like that, something that actually goes beyond what you've already presented to them. Again, that's a useful thing to be able to put in at that stage. Once those meetings have taken place, then we look for buyers to make an expression of interest, generally with a number attached to it and some kind of structure attached to it as well. And from that point, it's then a negotiation process to try and get to preferred bidder status. So I suppose you can think of it, it's a little bit like an auction. But what I say to everybody in selling businesses of the size that we do, you have to be flexible. So, if you could be trying to sell your business to an enormous organization, and if you say to them, all offers have got to be in by this date, they'll probably just rule themselves out, because they'll say, well, it takes us 4 weeks to get a board paper together. Our next board meeting's not for until this date. If you're going to just drill that process into them, and I've seen it time and time again, they will withdraw, because it's just too difficult. So when you're dealing with very large businesses, you need to have a degree of flexibility. There aren't many buyers out there that like being part of sale processes. They'd like to find things that are off market. That's their preference, because then it's not competitive and it's not time pressured. So that's just something to bear in mind, I think. Once we do get to preferred bidder status, just to kind of wrap up the full circle, we enter into heads of terms, which is the sort of non-binding agreement in terms of the typical things like the consideration, when it's going to be paid, etc. And then it's a question of handing it over to the lawyers to complete the transaction.
Yeah, thanks for the process overview. And if anyone's again got any questions about that process that David's given us an overview, then please jump in and ask any questions or comments. And I'll include his contact details in case you've got any questions you want to pick up with him directly. I think one of the things I'm picking up within that I see is often massively undervalued to a certain degree within the sales process is the importance of building some form of relationship with the buyer. I'm not saying, crikey, you're going to go on holiday with them or anything like that, right? But it's very easy to be quite standoffish in the sales process. It's like when someone's coming around to look at your house and they're starting to point things out about your house that you don't particularly want them to say, and you start to become quite defensive. And it can actually start to massively affect the relationship and the negotiation, really. So I think the thing that I just would build upon what you said there is that comfortableness with feeling when people start asking you questions about your business to be openly challenged about it without being defensive. And secondly, try and build that relationship and confidence within the business. So when you're talking about the business, speak about it confidently, what you are doing well. Just a small point that I thought I'd build upon there based on my observations, David.
I could go slightly on that same point as well, actually, Phil, is that relationship thing is it's never too early to build it as well. So even before you've entered into a sale process, I often, if I speak to people 3 to 5 years out from selling, I often say to them, start to have conversations with who you think might be prospective buyers. Because if you can build up that relationship at kind of board level, when you do come to sell, you've already partly sold the business at that point in time. So that's a really powerful tool that you can use, even before you go to market.
I completely agree, and I know that a lot of businesses are very hesitant about talking to their competitors. But again, I'm with you. I talk to your competitors within your market, and I think that sharing experiences across the sector, and even if it doesn't come to anything, if you've got the basis of some form of relationship there with your competitors, some of the best people to sell your businesses to are people already in the same sector as you, maybe bigger than you, maybe smaller than you. Don't discount smaller businesses that are smaller than you that might be have a bit of funding available that are looking to scale.
Yeah, often business owners will say, "Well, they can't afford me. They're smaller than me," but you don't know what's behind them. You don't know if they're backed by, wealthy individuals or a private equity fund, or quite what their situation is. So, absolutely, I wouldn't rule anybody out.
Yeah. Let's move on and talk about, well, we talked about the valuation piece, which everyone's always keen on, but tax implications, which I'm sure you get asked and talk about a lot. Just share with us some of the tax implications. And you mentioned the change in the budget and different things that are happening that people need to be aware of when it comes to tax.
I'll keep this quite high level, obviously, because we could probably do hours on this. But broadly speaking, at the moment, if you sell a business and it qualifies for something called business asset disposal relief, then each individual shareholder and the first £1 million that they receive will pay 10% tax on that first £1 million, and then 20% tax on anything above £1 million. Now, the change that was in the last budget was actually they reduced the limit. It used to be £10 million at 10%, and they reduced it to £1 million at 10%. So quite a significant change. But those rates apply to each individual shareholder or each individual partner in the business if it's unincorporated. So in overview, that's what you're looking at. That's capital gains tax, and it's obviously a much lower rate than income tax, and that's why it's obviously, in terms of realizing your asset for sale, that's why it's attractive to keep these things within the capital gains tax remit. One interesting point is EOTs, which I mentioned earlier. EOTs are entirely tax-free if structured correctly. And there are loads and loads of hoops that need to be jumped through, but they can with the right advice. One other thing to just mention on tax is in terms of the equity valuation that I talked about earlier, the second part of the valuation. So you've got enterprise and you've got equity valuation. If you have got things like property in the business, or you have got things like some surplus cash in the business, it is possible that all gets wrapped up in the equity valuation. So it's possible that that all gets wrapped up in the share value as well, obviously within reason. So that's another sort of tax planning point to bear in mind. Beyond that, there's lots of complexities still around if I sell my business and I don't get all of my money up front, which is a really common scenario, how that's taxed. And there are some options that we can look at. So, for example, some of our clients think, understandably, capital gains tax might increase in the future. So they might be saying to us right now, is there a mechanism where I can lock in all of that tax now, pay it at what I might think is going to be a lower rate than the future? But the quid pro quo is that you've got to cash flow that, you've got to pay it now as well. And if you're not receiving all of your money up front, then there can be a cash flow disadvantage. So that's a conundrum that lots of business owners are looking at the moment. Do I bank what I think is a lower rate of tax versus what it might go to in the future against the cash flow impact of that? But there's different structures that we can employ that suit either scenario. But I mean, as I said, I've been doing this a long time. Most budgets, there's a rumor that either CGT is going to go up, Entrepreneurs Relief, as it used to be known as, is going to disappear, and even in the last round of budget, they were talking about CGT being aligned to income tax rates. I mean, that would be moving from an effective main rate of 20% up to 45 plus, and there becomes a point really where people, if it gets to that point, people will stop selling their business anyway. That's the problem. But these rumours usually exist before every budget, and I expect as we get towards the end of this month, I think it's the 27th of this month, the next budget, there will be those rumours will be stoked again. I don't know if I haven't seen the strength of rumour this time round as we did before the last budget. That was probably the strongest rumour that something significant was going to happen to capital gains tax, but who knows?
Yeah.
I think Boris has actually gone out and said that he doesn't expect anything to happen to CGT now, which probably makes it more likely that they probably will.
How do you read into it? We won't turn this into a political discussion, but you're absolutely right. I think that I'm seeing that a lot of concern, particularly with the entrepreneur tax relief, because that does make such a big difference to the sale. The 10% up to $1 million, has such a big difference on what you then decide to accept as a figure for the business and how you decide to move forward. So it's a really good share, David. We've had a question come in. Do you have indications from potential investors that they're interested in buying a business but don't actually know what? Put another way, they have funds to invest but don't know what opportunities are available.
Yeah, that does happen. So there are sort of the professional funds out there, the private equity industry that has that, although they would have some indication generally about what they're looking to invest in. We do talk to potential buyers in exactly that situation, but we often try and get them to narrow it down because it's really hard for us to try and match a potential business for them to buy if we haven't got some idea, at least of industry, that's the most, or industries that they would be interested in. Some buyers do say, well, I'm just interested in a cash generative business. Or they might say, I'm just interested in distressed businesses. But I think narrowing it down to industry is really helpful from our point of view, because otherwise it's a bit like a needle in a haystack, really.
Yeah, good share. Great question for that being raised. Really
It
appreciate
is a
that. If
really good
anything,
question. There are private individuals out there. Typically, they're people that have sold businesses before.
yeah.
That's a very common scenario. We'll see them then try to get back in because they might have sold their business. They might have done their earn out and been in the business for a couple of years. They could become bored pretty quickly, and they want to get back in.
So we've got another 9 minutes or so. There might be some more questions that come in. For those that are watching today's session, I'm running another session next week with Andrew Cooper from Green and Green. Andrew very kindly introduced me to Dave, and that's how we got to know each other. Andrew's going to be looking at things from a legal perspective. So we've touched upon things from a financial perspective with David, but next week we're going to be talking about things from a legal perspective. So you're welcome to look at my profile, see the event details. I'm going to be posting about that as well. And that's next Monday. We're going to be running that LinkedIn Live. But just to wrap things up today, let's think about one top tip that we can give everybody listening today. So those that are considering selling their business, not just now, but in the next few years, what would be your top tip? And if you can't narrow it down to one, I'll let you go for 3 maximum, David.
Top tips. What was the time period? You say in the next
Next 3,
10 years?
let's say 3 years. Yeah, let's say next 3
In the
years. So
next
if someone
3 years.
looking at selling it now or looking to the next 3 years to offload their business, what would be your
Okay.
top tips for them to start thinking about?
Okay. So I'd say to them, think about, it sounds obvious, but think about those potential buyers of a business. Make those initial conversations at a high level, at board level. Try to mold your business into a position where it's saleable to that type of business. That would be one of my top tips. I am going to use more than one though, Phil, if that's okay.
Go on.
I'd say obviously maximize profitability in the run up to sale. We can talk about all the softer aspects of business valuation, but actually when it comes to it, most of it comes down to a mechanic of how profitable you are and whether you're in the good industry that's attracting a high multiple. So profitability is definitely up there. And then finally, I suppose I would actually say, think about that management team. We've talked about it several times, haven't we? If you're 3 years out and you've not got somebody who's operationally capable, or a team that's operationally capable of running that business, as I say, that's not going to stop you selling it necessarily. It might do, but it's just going to lead to a situation where you don't get as good a deal as you might hope to.
Yeah, good shares. Well, I'm going to have to come up with another one now because that was going to be my top tip about the management team. So I'll think about some other ones.
Sorry.
So, no, look, really good shares. I hope everyone's benefited from today's session because I really appreciate your time, David. One of the ones that I've got as a top tip is define what you actually need financially from the sale of your business. This is working backwards a little bit. This is thinking about in terms of the numbers for your retirement, for thinking about the tax implications that people like David can advise you on. Define the figure you want and work towards it. A lot of people at the moment are thinking about selling their business because they want out. And after 15, 20 years of putting that into your business, there's a danger that you're going to come out with maybe less than you really wanted. So rather than going through a rush sale, just step back from it and say, what is it actually I want to get out of this financially? And I think what that does is that can make you feel very comfortable with the sale process because you've defined the number. I think the second thing, and this does link on with the management piece that David's talked about, but it's a little bit broader, is focus on getting the business to the point where it works without you. Often, and David used the example earlier where someone felt pride in saying the business relied upon them. From a buyer's perspective, regardless of whether it's a competitor or private equity, they're going to want to see the ability where the business can work without you. And whilst earnouts can work well, in the main, they can be quite a challenging process to go through once you've decided to sell your business. So if you can go for a straightforward trade sale, that is always the ideal. There's a reality you might need to stick around within the business for a period. But if the business is reliant on you heavily, that is going to be quite a painful process if you are still working very much in the business. And that links in with the point that David said around building that management team. And the third thing, finally, is be open to all options and make sure you engage with specialists like David. Okay, speak to specialists that deal with this, because there can be that thought process, well, I'll put it on certain websites myself, I'll market myself. But the reality with that is it can be challenging. Speak to the right specialists and engage with them that can really help you around the sales process. So they would be my top three. Anything else to add, David, before we wrap up?
No, I think the first one you mentioned there was really excellent, to be honest. What you actually need to retire, or whatever that end goal might be. I think that is often forgotten, and people will say, "Well, I don't know what my business is worth. I don't know what I need to sell this business for." So I think that's a brilliant shout, actually.
Good. Well, I really appreciate you coming on today, David, and I've included the contact details again. We haven't had huge discussion going on in the chat box today. I wasn't really expecting it because of the nature of the confidential nature of the discussion today. So David's contact details there if you want to pick up and have a discussion. Before we came on, actually, one of the things we were talking about is maybe getting a business owner on that's gone through the sale process and maybe sharing their experience of what it's like to go through the process. That could be really valuable. And we're thinking about running some future sessions looking at the buying side of businesses. So we're looking at this from a selling perspective in today's session, but we're going to look at it maybe from a buying perspective. So there are going to be some future sessions that we're going to look to run. So keep a lookout on mine and David's LinkedIn profiles. Next week, we're going to be doing the session with Andrew Cooper, where we're going to be looking at things from a legal perspective. But I hope you've all got value out of today. And there's been certain points that we've covered that's made you think differently about selling your business, if not now, in the future. David, thank you again. Really appreciate your input today's discussion and for a lively discussion.
Thanks, Phil.